I welcome you all. Today I'm going to discuss about the balance of payments account. First, I will take up a definition of balance of payment. What is balance of payments? And then I will talk about the components of balance of payments. You know that the transactions, domestic transactions, for example, the transaction between the resident require the domestic currency. Whereas when transaction takes place across the countries, then the foreign exchange, that is the foreign currency, comes into picture. So whenever any transaction is carried out between resident of a country with the rest of the world, it is recorded in an account which is known as balance of payment. You may recall that one of the major objectives of any country is to maintain a healthy balance of payment. As a matter, as for your information, the 1991 economic crisis in India was triggered by balance of payment crisis. So I will take a definition and will tell you what are the items behind balance of payment, namely the current account and capital account, and I will discuss some of the implications. So let us take a definition of balance of payment. Balance of payment is a systematic record of all economic transactions, export and import, the capital flows in and out between resident of a country, say India, and the rest of the world, carried out in a specific period for, let us say, 1 year. Now, what balance of payment does, that balance of payment tries to record all the transactions which results in supply of foreign exchange or demand for foreign exchange. Let us have a look at these components that we make clear. For instance, export. Just I will give you an example. If a export will result in supply of foreign exchange, any exporter will receive dollar or yen or other currencies. Whereas if import is carried out, it will result in demand for, because the importers will have to pay foreign exchange, whatever the currency, denominated currency. If, let us say, FDI flows in our country, the foreigners invest, it will result in supply of. If, let us say, Indian companies make investment abroad, then it will result in outflow, which will result in demand. Rupee will be converted in. So all those items which are recorded, the entries are recorded. Any item which results in inflow of foreign exchange, it is a plus item or a credit item. Any item which results in outflow of foreign exchange, that is a debit item, like, credit and debit entry. Yeah. So based on this thing, there are two main accounts. One account is the current account. It's like income. It includes export and import of goods. Like export, which is the supply of, and this is the import, the difference. Then export of services and import of services like banking, insurance, and other services. And then it also records other transactions like some unilateral. Unilateral means that there is no counter transfer. Like if India receives some aid or India gives aid to certain country, let us say Afghanistan and other, it is not necessary that Afghanistan will reciprocate it with similar aid. Whereas if export is carried out, then the exporter supply the goods and services and they receive payment for that. Similarly, if importer are there, they receive goods from the foreign the suppliers and they make payment. So there is a flow and counter flow. That is why the word unilateral is there. Then when we add up these three items, then it results in what we call current account. It is like the income, net income. It does not result in liability. Okay, it does not result in any liability. That is the future. You have to pay it. Although the import another thing, there's a period like credit. Understand it that if you're taking it, the payment period may be there, but it does not will create any liability like any loan or other thing which creates liability. So it is like. Now this is capital account. Capital account involves all the purchase and sale of assets. And it may involve the loans, investment in shares, property, bank deposit, and like that. For example, portfolio investment. If foreigners make a foreign portfolio investment, it would result in an inflow. Similarly, Indians make investment in other foreign currency, it will result in outflow. FDI flowing in our country, then it will be plus, and FDI flows out of it will be like this. So all the investment across, which results in it may be loan transaction or investment in other assets, all they are recorded in capital account. Now, when we sum up the capital account, current account and capital account, that account is called balance of payment. The word balance is that balance of payment always balances. Why? The reason I will explain to you. Let us take a concrete example. Now, this is a stylized, tailored statement. So it is given billion. For example, here it is written that export and import. Let us say country 550 in a particular year, 50 billion of export and import. So the difference is minus 200. So this is called balance of trade. Balance of trade are those which are called merchandise goods. Then export of services, banking and other provided by. So the export of services is to the tune of 150, whereas it is this is the supply and this is the like this. So the difference is plus. Now unilateral, as I said, that aid and other thing which is received, gift and other thing. So it is 100, let us say, and is 20. So the entry is 50 plus 20. Now, if you add up this thing, this will give. This is called balance of transfer. This is called balance of services. So if you sum up this thing 1 plus 2 plus 3, it is called the balance of current account is in deficit. That is, the country is receiving less supply of foreign exchange. Then how to make up this? In a 100 minus 130 billion foreign exchange required. So this like if you are spending more than what you are earning, then you have to borrow it. So this may be the case. If it is deficit, then it may be the government there may be loans, the other arrangement may be there, or count if they results in inflow of foreign exchange. For example, if this is the deficit, but the capital is flowing our country, like let us say portfolio investment, FDI, and other type of investment which are coming to our country. So that will result, let us say, in you can say here. So the flow of foreign exchange. Let us say that in this period, there is a inflow of foreign exchange through via portfolio investment, FDI, and other investment in our to the tune of 200, whereas 70 is that is the Indians which make investment abroad and other, they are 70. So here you see that minus 130 and 1. So that is the capital account. Whatever is deficit is there, it is made up by the inflow of or the receipt of. It may be loan also. For example, if there is no receipt, so government has to take loan. Like in 1991 when the FDI flow was not coming, So we have a shortfall, we borrowed money. So all these are recorded here, that has to be paid later on. It will result in a liability that has to be paid. So if, for example, FDI flow and other flows are not there, the country is not receiving foreign exchange, it has to borrow. Big borrower steals. So the nations cannot steal, but they can borrow it. And sometime, and that is why you see that the deficit has to be, made up from the borrowing or other inflows. So that is why if you sum up these things, then it is that the balance of payment is the zero. Actually, by technically, it will always balance. There might be some discrepancy when recording is not correct, that when you sum up this thing. The idea is simple. The idea is that whatever shortfall is there, if you're not earning enough foreign exchange through current account, then it has to be paid through either borrowing or by inflow of the foreign capital in your country. In some countries do not receive, so they have to borrow it for making. For instance, 1991, we did not have much foreign exchange reserves, and our foreign exchange reserves had dwindled to a level which was barely sufficient to pay for 3 weeks import. Beyond that, and we were running high current account deficit. So that is why government has to borrow money, and it transported gold back to Bank of England for borrowing. It approached IMF, and then reform is started like that. So giving this thing, we can write this thing, balance of current account plus capital account is zero. Or if you just use this equation and say that if balance of the current account is in positive, then it will be negative. And in those countries like China, they are having surplus in current account. But because they earn foreign exchange, so investing in foreign exchange is also a type of investment. So naturally, they may be holding dollar denominated currency, or for that matter, investment. So similarly, if capital account is in, if you just transfer, then the current account will be in the case which I have like countries like India, where we are having current account in deficit. So that is why the capital account is now, because of the inflows of foreign exchange in our country through FDI and other. We are having a healthy, they have no problem as such of foreign exchange. We have built up huge foreign exchange reserve for that. So in the case some crisis occurs, so then we can use that for making up. And as I said that this is actually, it does not check, there is a statistical discrepancy as well. There is error term, okay. So then naturally that will make up, because all the transactions, they are recorded, but some transactions there are that do not get fully recorded in balance of payment. That is why there is always some discrepancy. So a country which is running high and persistent current account deficit, it means that the government is not performing well on export front. Another thing, it's importing more, and moreover, and the country is also not attractive for investment. Otherwise, the FDI and portfolio, especially portfolio, which is short-term capital, will move into that country to take advantage. Why capital flows in a country? Because the rate of return offered in that, if you make investment in those, is higher than the domestic country or other countries like that. So balance of payment is a very important account, and you may recall that this equation, if I just write it here, total demand in the economy is C plus I plus D is X minus M. This part is a part of current account, that is export minus import, especially merchant. So how much goods and services. So this part, that is why this tells us that, for example, it can tell us that how much is domestic consumption, investment by and government expenditure, and how much the foreigner are spending on our goods and how much we are spending. So a closed economy, we will have, there is no trade is there. So this component is in. No, we are not living in a in a situation right now where a country does not have any outside relationship. That is why we export and import it like that. So that is why this is important, in the sense. So and please also keep in mind that in managing balance of payments, exchange rate plays a very important role. I will come to that point, and I think Dr. Tariq Aziz has taken up. For instance, for example, in order to promote export, how to boost export. So then, for example, the current situation is that rupee is depreciating. Depreciation of rupee, this simply means that if rupee dollar exchange rate is 76 per dollar, let us say that it becomes 76 more rupee per dollar, and this will make the import costlier, and the exporter will receive greater amount when they convert it 76 into 1 million, earlier 75. But it has also got another important effect. Let me simplify it and say that let us assume rupee dollar exchange rate is 50 rupee $1. I'm just giving it. Let us say an exporter, a good cost exporter 50 rupees in Indian, and when it quotes to foreigners, then it becomes, let us say, $1 to the foreigner, isn't it? When you have to pay it. Now let us say that the rupee depreciates by and it becomes 100 rupee per dollar. The cost of good is 50 rupee for the domestic producer. So given this thing, the price which the exporter will quote, it will be 0.5, that half of the dollar will be used for that. So in other way, what happens that international finance, those who will opt for, is that there is another route which depreciation of rupee makes Indian good cheaper to the foreigners, because they have to pay less amount. For example, if rupee dollar exchange rate is 100 rupee now, for paying 50 rupee or $1, the foreigners will have to pay lesser amount, and the exporter, will quote a lower price for that, So the idea is that, and moreover, exporter will also receive greater amount because of that. But at the same time, it has got another effect, because in our country, there are the oil import is there, edible oil we are not self-sufficient. There are so many things which we realize. So that is our import is inelastic, and cannot. So that is why the decline, the depreciation in the exchange rate will affect our current account on account of that. I will provide a link to you, and you can go through. Now, you see that as I said that if you look at there are some mysteries. That the balance of payment record all transactions of for instance, if all the countries' current account, let us say, export and import. If you sum up the export and import of all the countries, add it. For example, if a country is exporting 50, then it will be minus for the other country, because it will pay. Similarly, if it's importing, it will be minus, for other it will be plus. So finally, if you sum up all these things, it will must add up to zero, because one is gaining, other is, there is a counter transaction overall in that way for all the countries together. But what has happened over the years that still that persists, that this is current account is not zero, whereas technically speaking, it should be zero for all countries together. The problem is that because of the data, and sometimes it is not reported, understated, and the and because of that it happened. Let me give you a simple example, like diamond is exported from South Africa. So South Africa will export to India, and India will import from South Africa. So the export of South Africa, let us say item wise, and the import of India should equal, isn't it? I mean, if but we find that there is again discrepancy, because we have looked at this problem for a research purpose. We looked at that the country wise. For example, if you are exporting the same destination is there, India, so these should be recorded. For example, if it is reported there that the export was to this extent, and therefore import in our country should also match that. There is a discrepancy. That is why what is happening is that sometimes the exporter, under invoicing and over invoicing, like black money. Sometimes under invoicing and over invoicing. For example, export may be under invoice. So that some amount money may stay there, and import may be over invoice. For example, 1 million is there, but if 2 million bill is, so that is why this has to be paid to foreigners. So import may be over invoice and export may be the under invoice, because the exporter will receive less amount, but the rest of the amount through an arrangement will stay there. So that is why the misreporting and illegal and all these things. That is why not only in our country but overall also we find that this problem is there and like that. So, but my objective here was not to tell you about these mysteries. There is always a mystery. So the balance of payment account and how it affects this. So if you have any question, you can ask. I will close for this today. If you do not have any question, you can ask any question.
Thank you, sir.
Thank you, sir.
I will provide, let me show to you just 1 minute. I will provide you this and you can go through, then we'll discuss. This is an article, from the print, So how rupee affect macroeconomic domain and why it is today's news. So you can go through this thing. The online version is available, and this explain your how good news help exporter, better domestic competition, a weakening rupee, how it affects it, and how it is going to affect the CAD, that is current account deficit, and other things. So like bad news, CAD, that is current account deficit, this was the rupee value plays a crucial role in stable most like current account deficit, fiscal deficit, inflation. So this has been explained here. So I will provide the link and you can go through this thing and we can discuss it. So I close for the day and we'll see you in next.